All right, welcome to another episode from the Chart Reader. So it's been a while since I've covered this sector, but we'll look at the big ones, right? We'll take a look at Tilray, we'll take a look at CGC, SNDL, MSOs. If I have some time, I'll break into some of the MSOs, and then we'll wind it out with HITI. And really, what has felt like the recurring theme for months now, I think, high tide continues to be the bullish outlier, while all these other stocks, I think except SNDL, I think I'll take that one out, but everyone is basically losing the death line and losing that 20% that I always talk about, right? And I don't talk about the death line and black hole vortex. I'm not here. Views for fear aren't my game, all right? But when you break a golden line up, I'm expecting to be showered with just 20% gains and 20% gains and 20% gains. When I lose a red death line, I'm expecting to lose 20, then another 20, and so on and so forth. And we're literally at the 20 point right here for a second time, right? I can probably draw a line, and I will when we get into the technicals, right? But yeah, Tilray is doing what the death line brings. CGC, we're basically a little more than 20%, right? Every 30 cents, roughly, it's 28, but let's just use 30 for simple math, right? That 60 cents would be 20. We're actually a little bit more than 60 cents below, right? So CGC is that. MSOs, I'll be honest, I can't do this math that quickly. Oh, it's $1. So we should basically be at 390. We're below 20% already here, right? SNDL, like I mentioned, this one isn't quite there. There's a good distance between. There's some support here, but man, the recurring theme across all these four was below all five moving averages, right? And that's definitely a little bit on the tough side, excuse me. High tide, when we look at high tide, again, the bullish outlier, where those were going down since at least November, maybe even worse. This has basically been going up very nicely since October. This is at least over a couple of moving averages, and hey, this is still over the golden line, which is always a comforting thing, right? So, and even this is still over 20% of the golden line, right? Which is exactly what I said in the beginning, right? There's a reason I like the golden line, and I call that red death line the black hole vortex, right? All it does is just vortex, black hole, suck, right? I think the one important thing to look at here is the Dow Jones. All right. I always say this. When we're talking about this sector, we're talking about farming, right? We're talking about selling in stores. We're not even talking about e-commerce. There's no Amazon.com orders that'll take it. Maybe one day, right? We're all thinking that one day. But yeah, at the moment, this is as Dow Jones basic as it can get. Nothing to do with technology at all, basically, in the entire sector, right? Dow Jones went from horrible to horizontal to all of a sudden trying, all right? And if this thing can get over the 50 moving average, that'll be really, really nice because green, red, red is the same green on the big index, excuse me, as it is on the little tickers that we love chasing, right? So we really need this 50 moving average to break. There was a little bit of a wick moment, right? When I look at the S&P 500, this thing had a nice little doji. NASDAQ as well. I'm showing these more for the Dow Jones than anything, but look, everyone's trying. Everyone's trying, and hey, we can't make assumptions, but come Tuesday, because again, Monday is closed for MLK for holiday, right? But come Tuesday, we really need all three of them to break. If the Dow Jones can do it, hopefully that'll bring some love into this sector, all right? But yeah, as it stands, like I said, 4 out of the 5 of these are under all 5 moving averages. 3 of the 5 are under the death line and either at or already much lower than that first 20% tranche that we always talk about, right? So cool. Before we do go any further and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel, share this video online, comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms, but for real, just being here, giving me your time, oh my goodness, I appreciate it so much. All right, so look, let's get into it, and you hear me say a couple baseline things all the time, all right? Good things happen when you're over the 8 and the 20. All right, that's the 8 moving average is a stock's best friend, and I mean Tilray has seen it has bounced and bounced and bounced and bounced its way on up before, bounced and bounced and bounced and bounced and slipped, but hey, 8 and the 20 and all the way right, like Tilray knows what to do when it can get over the MAs. There's a good big one all the way right there, right? But look how long ago it was, right? And when you're not best friends, you're the complete opposite, and all of a sudden you just can't get over, you know what I mean? And every now and then maybe you can, but just it's tough, right? And lo and behold, we find ourselves here. And look, it's the same thought when I look at CGC, right? And I think it's even louder how much the 8 and the 20 have gone from what was a good friend. Look at this thing just jump on it, and you lose the 8, but you never really lose the 20 and all. I mean, it's the lines are your friends when they're your friends, and they're your worst enemies every other moment, right? And again, MSOs, exact same thoughts, right? When you just can't get over the 8 moving average, it's the most frustrating thing in the world. The opposite of it, right, is just bouncing, never even having to use the 20, occasionally doing it and going back on up, right? So that's always what I like looking for. Again, believe me when I say I sincerely believe this sector will one day do well. All right. I don't care if you enjoy the products or not. End of the day, vices never die. That used to be a little catchphrase I would say whenever I cover this, right? But alcohol does really well. It is recession proof, right? Tobacco, it used to do a little better. I don't know if tobacco is as popular as it used to be, right? But I mean, again, recession proof, these vices never die. Believe me, if I was to be budgeting with my wife because all things just hit the fan, right? I try not to curse, but you know how that saying goes. Maybe if I was addicted to something, I would probably budget a little bit to make sure I can at least maintain a little bit of a vice in the tough times too, right? So just it's a real thing that I am not oblivious to, right? The thing is, what I love about these technicals is it just allows everything to kind of be in the same place, right? So I mean, looking at the technicals, all right, the easiest thing I would say is I would be potentially interested if Tilray can get into this like 135, 136 range. All right. From there, I think there's a decent channel up to 150. From there, there's actually a decent channel all the way up to 170, right? I would like Tilray if we could break the 50, go to the 100, break the 100, and go to the 200. Those are nice little gaps right there. I don't like it under that 50. Number one, I'm not really here believing we're going to get over the 8. Number two, I think I've just seen, hey, if we're going to get over the 8, either the 20 or the 50 is going to be really hard, let alone both of them together at the same point, right? So get me there, and all of a sudden there's some winnable double-digit gains to be had right there. Otherwise, look, realistically, I can probably draw this one as our next red one. I think that, I mean, I normally don't do that, but yeah, I think I'm gonna actually delete this line. Truth be told, I'm gonna delete these two lines. This 150 at this point is the 100 moving average, and you know I always say it. You know what? I'm gonna keep those. I remember these two were really important lines. I remember talking about that buck 60. I'm gonna keep these. I'm gonna keep these. I'm talking to myself right now, and I apologize. But look, I see that these MAs, they're slower. These ones are a lot slower than these smaller ones, right? But that 100's coming down, that 200's coming down, and I just remember those were important lines. So, look, we lose 116. My expectation is you lose another 20%. That's basically a 20-cent loss, right? 11, 22 cents. Trying to do some quick math in my head. That's in the 90 is cent world right there, right? So do not lose 116. I would actually be interested in this thing around 136. Also, if this goes to 136, I imagine that would mean Dow Jones took the 50 and is making its way towards here. Look, the next important Dow Jones number is 43,900, right? I'm a couple dollars away from that number. If Dow Jones goes there, hopefully, and I say hopefully only because we've seen the weed sector so disjointed from the Dow Jones so often. But yeah, hopefully Dow Jones doing well can maybe help Tilray get through that three tranche moving average channel, right? Get to this one, go to here, beat this one, go to there. That's the 1, 2, 3. I guess it's two really. Go from here to here and then there to there. Those two channels. I very, very much love Tilray over that $1.80, right? From here, you're over all the moving averages. You see where my next line is. But the problem is, I think it's a little bit more realistic to think we're going to lose that 160 than break that. But again, let's see if 136 can do it. Look, I don't like the RSI. It does look like it's still going down. Generally speaking, 30 is where the RSI should reset. But again, it wasn't that long ago. It was within the year. We were at a 7 right here, right? It wasn't even that long ago. We were even lower at a, what is this RSI? That's a 13. Okay, the 7 was lower, but you get it, right? So what was this one? This one looks like it's a little bit low. It's a 19 right here, right? So I don't know what is low. And again, it looks like we tried, we tried. Hopefully we can hold that 116. All right, that's I think the best thing I can say here. When I look at CGC, it's essentially going to be the same thoughts, right? Look, I would be okay with CGC if this thing can get to like 273. If this can get to 273, I think there's a nice little channel all the way up to 3 something on top of all that red right there, right? We've gone away from the 8. Maybe there's reason to think we'll come back to the 8. But what I actually do see on CGC is already under the death line and just below the only green candle that I see. I know 21 is a really low RSI, but again, as I just zoom out real quick, this right here was a 10 only a couple weeks ago, right? As I zoom even further, this right here was a 4.6 RSI only a couple months ago, right? So again, I actually see this already going deeper into the all-time lows, but again, can't make an assumption. Hopefully it can crawl its way back to 224, right? But yeah, I think it'd be interesting if this thing can get into the 275 and up range. From there, again, the channel's also there. If you can break the 50, you might be able to get to the 100. I'm not sure if I would be thinking 200 on this one. You can just kind of see how hard that blue line is right there, right? Yeah, there's not too much more to say. Where are we on the weekly? Again, you know, you're in the same place on the weekly. You're under the death line. You're under all the moving averages. Even this weekly, at some point in this year, it was only once, so that's probably an anomaly, but that was a 5 RSI. At the minimum, we've been in this range, 22, for a couple weeks. And then, yeah, it very much knows how to just stay right here in the 30s. And unfortunately, as it stays horizontal, the weeks actually go down, right? So CGC's looking tough, you know? There's one thing we did talk about, DEA. There was supposed to be some DEA. I remember we talked, I mean, trust me, you see all the corrupt stuff, right? It was this one. They were supposed to make an official comment about something. I know Cole threw some details. Again, if you know the details, throw them in the comments. But you can see it. They declined to make any statements. There's another thing that we were talking about, that they cancel the reschedulization hearing. I mean, we're following all the headlines, and unfortunately, all the headlines aren't helping the sector, all right? I haven't said Trump's name yet, but I will say it here just one more time, because I do say it a bunch of times. Trump should be good for this sector. Trump really has never said anything negative. Trump actually was expecting Florida to vote yes, and as surprised as I was, we saw it vote no, right? So I think he'll still do the same level of deregulation that he'll do other places here. I just, it's not going to be on the immediate, list of what I got to do. But I think in the next span of time, he should at least put a little focus here. Maybe someone in his cabinet will say something good, right? Let me come to MSOS real quick. And again, this is the one where I think the comment would be, hey, maybe if we can get a little, oh, okay. Yeah, here. I think if this can get a little closer to 375, I think from there's a real reason to think that it'll come up to like 420, give or take. No pun intended, obviously, right? I'm basically taking it to here. From there, you break that 420. And again, I actually can maybe see it coming all the way to 515. Notice I didn't come all the way here. I'm going to give a little respect to this gap fill border. You hear me say that all the time. Filling the gap is a lot harder than it generally looks like. That looks like an easy line right there, especially with the next moving average just that far up. But yeah, I stopped here for a reason. 515, 520, give or take, right? But yeah, it'd be interesting if we can break 375 and see how we can attack that 50 moving average. But otherwise, I mean, really, this is the new death line. Obviously, there are candles below it, but that's the line right now. I think that needs to hold, right? We've bounced, we're that's the line. Cannot lose 356. Obviously all-time lows is in that 340, so hopefully we don't lose that. But I would actually start, oops, don't click that. I would start getting very worried if we slip into 351, 350 range. So be careful with that on the MSOS ticker, on the MSOS ETF. Real quick, let's just take a look at the TrueLeave. What's TrueLeave look like? It looks a lot like MSOS, right? This is, are we at all-time lows? Not quite, but my goodness. Look, that's clearly the death line right there. And then where are you at? Oh, look, that's exactly where we're at. We're at the bottom of that, the top of that. That's basically where we're at right there, right? So we just got to stay above 470 on TrueLeave right there. Let's take a look at Cresco Labs. Cresco Labs. I think this is in all-time lows. Yeah, this is in all-time lows right now, right? That's probably the next line. 85 cents is what this thing needs to stay above. Let's take a look at Curaleaf. Curaleaf. It's trying to get over the 20. This one's a little bit more, I would call it optimistic if you want, but are we at all-time lows? Yeah, we're at all-time lows as well, right? So again, this one's at all-time lows. This one's just basically just dancing on the 8 and the 20 right there, right? So what's the other one? I like to look at Verano Holdings. Again, they all look exactly the same, right? So that makes sense why MSOS is just a mirror, since it's the ETF equivalent of all the MSOs, right? So cool. I think that's a good place for this. Let me know your thoughts. Let me know your opinions, even if you disagree. Let me take a quick look at SNDL, and I think I want to chapter it on its own, even though I don't have too many thoughts. It is by no means where those three are. Okay. And I know I even said in the beginning that this thing's below all 5 moving averages. As I'm looking at it right now, look, we actually haven't confirmed the loss of the last one just yet. Clearly, we're under all of them for the last 5 trading days. But hey, there's a difference between being under and confirmed, right? From there, we at least have that support. We definitely have the death line all the way down there. Arguably, I can probably draw another line right there, but I don't think it's worth doing at the moment right now. So SNDL is not as bad as those early 3 tickers and then all those MSOSs, all those MSOs if you were watching, okay? The disappointing thing is we wanted this thing to take off, and really since that November voting, it's been a little bit tough here, right? One thing I did mention about SNDL, and it's an opinion. There's not a lot of facts I have about it, and truth be told, I'm giving someone else's thoughts. It's not like I'm making these up, but some people thought that it might be good for SNDL to say no in Florida. You're not going to explode the number of licenses that are going to be going out from rec, right? All of a sudden, SNDL isn't just another player in the state that gets overrun with people. It's still a smaller number of recs, relatively speaking, right? And they're able to keep a bigger footprint otherwise, right? So just some Florida specific thoughts, because again, it looks like the no was bad and it was sector wide, but hey, you can say it wasn't as horrible as it was, relatively speaking, right? What am I going to say though? I don't like the spacing as much on these. All the other tickers that I was talking about, like I don't know if you fast forwarded or not, but Tilray, I like the spacing from here to here and then from here to here. On CGC, honestly, I like the spacing from here to here and here to here, right? Even MSOs had a little bit of that with I like the spacing from here to here and from here to maybe most of that, right? SNDL is just a little tighter than I'd like. Like the spacing from here to here is only a couple pennies, and I don't think that's worth the percentage. From here to here, it's just a couple pennies, and I don't think it's worth the percentage, right? So let me see if I can move this, and I think I can. Can I take you to 50%? Ah, that's a little too tight. No, I would keep it right here. Honestly, I would wait to get a little closer to 216. Maybe if you wanted, you can lower it to like 212. But again, at that point, I just wait a couple extra pennies, right? But SNDL, unlike those other ones, I wouldn't play it in between these moving averages. I just don't like the spacing. Get me over here, and yeah, we'll ride that green, 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 red, 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 green, 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 red, 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 nothing, 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 all the way up, right? So again, I don't want to lose this 174. I wouldn't necessarily be talking deathline just yet. Like there's some decent stuff going on right there. There's probably some decent stuff going on right there. But yeah, let's not lose that line. And more importantly, let's maintain these and let's just start creeping back up, right? That's the ultimate goal here, all right? So let me know your thoughts. Let me know your opinions, even if you disagree. We're going to end it last but not least by any means, because again, I'll say it one more time. This is the bullish outlier so far. All right. I think it's you can just visually see it. This has not lost as much as the other ones, let alone hasn't lost as many moving averages, hasn't even lost the golden line. Far, far, far away from the red death line of black hole vortex evil, right? Normally, I make the golden line an all-time highs line. That's obviously not what this one was, right? This one was just because of this extreme 2-year nothingness, right? But there's a lot of, in general, green, 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 red, 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 nothing, nothing, nothing. And hey, it's not that pretty, but hey, the goal is still to ride it up, right? 50 moving average did really, really well. And I think that's especially highlighted seeing how badly it did for the Dow Jones, right? We literally lost that line like a hot knife through butter. I would expect a farm stock like High Tide is, right? I say that with love, but that is what this is, right? A Dow Jones index follower should follow it. Instead, High Tide says, no, 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 I'm never even going to go below it. That's just incredible. A couple wick moments, but I don't care much about wicks, right? So a lot of strength on that 50 moving average line, to say the least, all right? What really does matter is getting over this 316 line. Truth be told, I probably would want to get over 325, 323, something like that, give or take, right? But if we can get over that 325 range, you saw my next lines up as I zoomed out, but it's basically 4 and 490, just rounding up, okay? What I do not want to do is lose the 50 moving average. And I think, to me, that's probably the line. Yeah, look at that. I was actually specifically looking at half of that, but it actually ends up being the top of that bad boy too, right there. Bad girl for the ladies watching this. But 295. I need High Tide to hold 295. As long as you can do that, I'll feel a little bit of comfort. Otherwise, if we lose that 295, it's going to be a drop to 280, potentially as low as 270. All right, that's what I would be looking at. Look, I said good things if you watch my High Tide longer term video, right? When you look at the monthly, I think the monthly is still saying an important story. Hey, we haven't broken that 50 yet, right? So again, I think we're still seeing some struggles, but hey, still very, very early in this quarterly, right? Maybe another 2 months could be good and this quarterly could get over that 50. Again, remember, I'm a dude that's here looking at the daily and the weekly, right? This entire January month is just a drop in the bucket if you're long and strong. At the minimum, if you're looking at a yearly view or something otherwise, right? But again, I think the important thing is that this is holding horizontally while we're seeing the rest go down the black hole vortex. And being a bullish outlier, that's not an easy thing to do. You hear me say sectors move together. All right. I generally don't care about how strong a fundamental is, right? And there's so many things that follow: the financials, the sales, the operations, the expense, this, that, and those, right? But there's something that's making this stay a little stronger than the rest. I know the high tide longs sincerely do believe that it is Raj and the team and the execution, and they love hearing all the stuff. I think the one last thing I'll end it on, and I think it's the most technical thing, and my mouse is down here for a reason. And look at the zoom out, right? Volume. I think there's a lot of things jumping out as I look at volume. First off, since right here, and as I'm clicking right here, I swear I had no idea I was going to click on the bottom of that peak right there and basically the start of the entire uptrend, right? But since right there, right, I clicked a little further, right there, that's where all that green is, right? In here, there's a good amount of green for sure, right? And you can see there's a nice little uptrend with it. And again, volume is king, volume is queen for my ladies out there, right? Here, I'm seeing what looks like more green, and man, that 50 average line went from insignificantly nothing to holding up here in the 200K very, very consistently, to now we're basically trying to live at double that, right? It wasn't that long ago we were only in 200. And sorry, I was trying to click right there, right? And all of a sudden we're basically averaging, I mean, I'm clicking at 700 right now, right? Where's your white line at? Your white line's at 800. The average is actually in the 800s, right? So we're pushing 4x the average daily volume from roughly a year ago. That's impressive. It is. And look, I get a little more excited as the daily volumes get into the nicer million numbers, right? But man, being here ain't that bad, right? Hey, being over the white line will also put you in that million range that I love, right? So this is a nice volume story. It really is. It's a nice 50-day volume growth. It's a lot more. As I zoom in a little more, I would say it's a little more balanced of reds and greens, but man, way more towers of greens than towers of reds too. So yeah, I dig it. It's interesting. The weekly doesn't scream the same volume story. It definitely screams the same 50 moving average story. We were all the way down here. We were stable up here, and now we've got a nice little steady climb, right? So, yeah. Look, again, I'm looking at things and talking out loud, right? So, we talked about the lines. We talked about the volume. Did I look at the weekly? Oh, I didn't look at the weekly. Yeah, look, again, 200 moving average is the last one for a reason. It's a hard one for a reason, all right? Doji, no confirmation. Beautiful candle, no confirmation. It's tough. It's tough. We're also under the 8 at the moment, too, right? I would have loved it if we kept riding the 8 up and over it. That actually wasn't able to happen, right? So, this is a tough weekly. It's a horizontal daily, and again, I think that 316. Where's 316 look? Oh, it's right here. Yeah, that's saying it would want to be just a little higher, a little closer to 325, 330. Look, I think between 316 and 330 really is that sweet spot for high tide. And again, you saw the next line up was 4 and then 490, right? So lovely. We'll end it right here. Let me know your thoughts. Let me know your opinions, even if you disagree. Oh, I appreciate you so, so much.